Good morning, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago on Wednesday, September 11th here in the AM, and bring you some commentary here in the energy market. So let's get started. Crude prices are off right now, trading down around $1.07 a barrel. We're off about just around 30 to 40 cents here this morning. Brent's a little weaker. That's off about a dime. We're trading around 111.15 there. Nat gas, that's off. We're down about 4 to 5 cents, trading around 3.53 and a half. And we've got the complex weaker as well. Obviously, if you've been following the oil market here, it's been affected here quite a bit by things that are going on in Syria and the idea of whether the U.S. was going to become involved with a military strike or not. And you should take a look at some of my prior posts because I had a lot of reservations that we were actually going to become really involved with this. Now, it's still very ongoing, but as we know, Obama has put this here to Congress to take a vote, and they've actually delayed even voting on this. You really got, you take a look at here. It's not even in party lines here. There's really a big division here on if the U.S. should get involved with it or not. And Russia has been negotiating some possible diplomatic solutions that could possibly remove these chemical weapons out of Syria's hands. And if that's the case, I don't think you're going to see the U.S. get any more involved at this time than they already have. Now, what has that done to oil prices? Well, take a look. We've seen oil prices really coming down here. On September 9th here, just a few days ago, we were hitting a high of around 110 and a half. Yesterday, we hit a low of around 106.39. So we've really seen this fear premium, this risk premium kind of ease on out of the market. Now, I don't think it's entirely gone, but it's certainly coming out here a little bit. Today, so far, we've got an inside day. Short-term technical indicators have moved into the neutral area. We just had EIA data come out a little while ago, and traders were kind of looking for a draw of around 1.75 million barrels. Came in of a draw of just around 200,000 barrels. So we did see a little bit coming out of the market there, but not a lot. So, I think this is going to help put possibly further pressure on crude oil prices. If we could take out yesterday's low, I really think the market's got the potential to move down to around the 103 half area, possibly even the 102 area. And I don't think you're going to get that all in one day. You might see that market kind of move back up a little bit, but I think gradually, especially if we see, again, what I talked about earlier in the post here with the things happening in Syria, if we really do see them moving to relinquish these chemical weapons, I think you'll see more fear premium coming out of the market. I've talked in so many of these posts about the stockpiles. I think that's something as an oil trader you really got to stay focused on. It really appears at this point that there's adequate supply out there here in the U.S. We do have to watch the little bit of concern over there in Libya as their output has been shrinking there a little bit, but in general, I think when you look at the supply situation, I think we've got adequate supplies here. So give me a call, shoot me an email. I'll be more than happy to talk with you. Got some different ideas, some strategies that we're looking at here right now. Give me a call and I'll fill you in on those. Of course, remember that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.